Hello traders, Ala Peters. It is 10 minutes before FOMC release. So this is our retail traders chart. Hourly chart is your guiding light for day trading. This morning we ignored bullish fake out, and this was a short trade, 5 points until Fibonacci support. So FOMC 10 minutes from now. So before we take a look at FOMC and long-term levels, I want to make sure each and every day, at the end of the day, we document the results we accomplished on that day. So before we forget the excitement of FOMC, let's document this trade. Everything I do in trading room, I do for demonstration purposes. That was a trade number 17. 5 points later, as you will see in previous video, you can see very clearly it reached decision point 1. If you know and understand trading rules, as you saw posts from Carol and Rick, you know extremely well. You do not exit the position, you do not move your stop until price will reach decision point 2. Reversal zone was reached 5 points later. Exact same accuracy you will see on the previous video. What we accomplished in the trading room is exact same formula playing out on various time frames. As I said, for months. Market heading to here. As I said, for months. If rates are not raised, don't be surprised to see market here very shortly. This is retail traders chart. This is the levels I demonstrate to you instantly in day trading room. Exact same accuracy applies to any instrument and any time frame. So, this is where bullish rally came from day after the election. This bullish rally is unstoppable. The only thing that's stopping it is this level, 32.67. What do we need? We need a pullback. Absolutely expecting market here, 2300, then here. After this level is here. As you're witnessing, every single one of this chart requires various times you hold a position. If you're trading daily chart, you're holding the position potentially for days, weeks, and months. If you're trading weekly chart, which been present in front of you, for the last 2 years, you're holding position for years. This is institutional levels. Bullish rally started here. And if you are a student of the course, so you had been in the trading room, you've been witnessing these levels in a play each and every day. This been ultimate Fibonacci resistance. This was the end of the minor trend. Had taken price 7 months to break through this level. This level is next. These levels will follow. This will be the war zone. So, as a retail trader, you recognize bullish rally overextended. This bullish rally, 426 points later, currently causing pain and grief for day trader. As I continue warning you about institutional buying and separating bearish correction, which is all that market gave us yesterday and this morning, from spectacular bullish reversals and vicious buying you are witnessing because Fibonacci said so. And Fibonacci said so day after the election. So, let's pay attention to the news and let's remember, I give you all Fibonacci levels far in advance, and each and every day I convert the biggest skeptics to trading Fibonacci only and to invest on Fibonacci only. What you're witnessing in front of you is the work I had done since 1990s, work that became full-time work since 2008, when I had nothing better to do but to study Fibonacci each and every day. And ask myself a question, what has caused this collapse? And this is the bullish rally. And this is where it came from. Reminding you, you know where reversal levels are? You know where to acquire the position. But investing and trading without knowledge, not an option. This was the support level we've been watching with my students before the election. And if you know the rules, you never shorted the markets, as silly hedge funds did, which was the funniest thing I've heard day after the election, which every single student who's been in the course for a couple of classes know that this bullish rally was spectacular, and shorting this market was not an option, as Fibonacci support was respected and the institutional buying in front of you is something I had not seen since the start of the website in 2011. So, let's see what market will give us right now. Hourly chart is retail chart. Hourly chart is a guiding light. So what do we need? We need a serious pullback. What are you going to witness? You're going to witness phenomenal formations, phenomenal spikes. Market right now taking a massive pause. Market right now is frozen. One of the most important financial news in America in 2 minutes. No matter how spectacular trade is, no one in their clear mind touching the market right now. The spikes on S&P can be 10 points, 15 points, 50 points in a matter of seconds. Unless you've been acquiring position from this Fibonacci support, which was the exit on that short, which was expected and what we discussed with students and you witnessed early this morning. If you did acquire long, you stop well outside of break even. Acquiring position before FOMC, never an option. Every single stop is a market order. Do not ever forget that. 1 point stop can become 50 point stop. Expect extremely volatile movements. And again, institutional bias long-term bullish. I would love for the market to collapse to where we were on Monday, to where the bias in the trading room was bullish here. That would be so much better than buying this high as a day trader, as market been dancing in bearish correction but never broke Fibonacci support. News at any moment. Have the rates been changed or not? News just came out. FOMC raises federal funds target range to 0.5 to 0.75% as expected. Everyone clear on that? Is everyone clear of the importance of reversal zone and why our bias second day in a row as a retail trader remained bearish? Is everyone clear what happens if you're acquiring bullish position randomly? Right now it's all about this support. Crucial. Clear on that? 2 days in a row bias was bearish as this is reversal zone. What will happen at this support? Will be marvelous if market will break through the support and collapse here. This is where fun will begin. It's all about this support right now, as I warned you. Expect spectacular spikes. How much did market collapse despite bullish rally on large time frames? 7 points in a matter of seconds. Is everyone clear? Fibonacci support respected? Anyone surprised? Bearish news, rates are raised. Fibonacci support respected as expected. Allow markets to settle down. We'll be monitoring for long. This is when market volatility will test your knowledge. Clear? This was the exit point on the short. This is support we've been watching. No surprise whatsoever. Bearish news, rates are raised, but expect market extremely high. Institutions continue adding to positions. So is anyone surprised what we are dealing with? This was bearish correction. This was Fibonacci support present in front of you since Monday. As I said to you, I don't care what FOMC is, expect market at 2300. But this is pain and torture for day traders. This is bearish correction. This was expected. So, and that's the key. This is a danger touching FOMC at the time of news release. Again, plenty and plenty of trades prior. Right now, incredible conflict, market dancing back and forth. Knowledgeable trader knows that. Pushing a trigger button and hitting market order? Not an option. Market testing you for the rules. You know Fibonacci rules taught in the course? You know exactly what you're waiting for. You are not speculating, you are not sweating, you are not pushing market order. You know exactly what you're waiting for as a knowledgeable Fibonacci trader. Knowledgeable trader knows this is massive bearish correction. Bullish rally overextended. Market will go to here, but if you're buying it here, this is what you get. Pain and torture. Your success rate less than 20%. Knowledgeable trader acquires position as low as possible, not as high as possible. And that's a problem, and that's a pickle. Market testing you for the knowledge of the rules. If you're respecting that you cannot play basketball without rules, why would ever anyone think you can schlep Fibonacci on the chart and place a trade? Good luck on that one. Nothing good will ever happen. The only thing that will happen, not much happiness. Happiness plays out when you play by the rules, when you survive the test of patience and discipline. Guys, 1 minute. Nothing good is possible if you disrespect reversal zone. This is extremely dangerous dance. This is ultimate correction on hourly. Exactly powerful reminder why bias remains short. As knowledgeable trader acquires position as low as possible, not as high as possible. So keep your fingers crossed, market will crush and burn through this support. This is where fun will begin. And I will not be here to hold your hand. I will be spending time with one of the most unique students I've ever had for the next 2 days, who is visiting me here from Dallas. And I will be showing you pictures tomorrow in the room. So, crush and burn S&P. How did we know that this was expected? And this is the power of reversal zone, and this is the power of Fibonacci. Do not randomly push a trigger. Wait for the rules. This been very powerful reminder of endless bullish fakeouts. Clear on that? Fibonacci kept you out of trouble. Long was not an option. And that's the power of reversal zone. And that's the reason 2 days in a row our bias remained bearish. That pure and that simple. These bullish fakeouts did not mean a thing. Institutions can afford adding to position. You as a day trader cannot. This is Fibonacci support. Will buyers step in from here? Market testing you for knowledge of the rules. And that was our chart in the trading room early this morning. Remember the reversal zone? Bullish news on oil did not mean a thing, as I warned you. Who the heck cares? We have 2.5 times undersupply on oil, and oil is crashing. It came to reversal zone. Ladies and gentlemen, once again, Fibonacci warned you. Bullish news does not mean a thing. And it's all shown and recorded on the previous video, in case you missed it. Price said long time ago, since November 29th, when I came back. Respect and adore reversal zone. No matter what the news is, never enter into it. And that was the reminder this morning. And that's the reason I named this Fibonacci levels reversal zone. And that's what you must respect each and every day, no matter what you trade. Doesn't matter if it's oil hourly, doesn't matter if it's Apple monthly. This is the key. You witnessed each and every time price comes to reversal zone, you ignore trend fakeouts. If you ever acquire position at reversal zone as a trend position, your success rate less than 20%. Week prior, market collapsed completely. Previous 2 days, market tortured you in correction. Our bias remained firmly short. 5 points, as you saw the posts from my students. If you know the rules, you know exactly where to enter, you know exactly where to exit, as this Fibonacci support was respected. Long at this area, not an option. As a day trader, you acquire position as low as possible. I thank you so much for your time. I have to meet incredible student from Dallas. Any questions, never hesitate to ask me. And as always, trading room open only Monday through Thursday. We will start from scratch on Friday in Fibonacci class looking at long-term levels, and new class will start on December 19th. If you know what to do, if you know Fibonacci rules, keep your fingers crossed that market will collapse even lower, as this is where our bias was bullish on Monday. Thank you, traders. Have a marvelous day. Adios.